Well, thanks everyone, and welcome to this chat about the RMB. And ANZ's just recently done an RMB handbook drawing together a lot of developments in this world, but clearly beyond the work that we're doing here at the bank. China is a massive story on the front page of a lot of newspapers, and at the heart of that is capital markets, currency markets, what's happening today with equity markets. But in the longer term picture, when we look at China's development and we think about what the Caged Tiger report last year said, that internationalisation, the opening up of China's capital markets, liberalisation are going to be absolutely critical. So where does the RMB sit in that story?
Now, obviously, the RMB internationalization is a key piece of the overall economic reform in China, as the economy is trying to transform its economic structure, shifting away from purely a manufacturing economy to a more services-based economy. Now, one of the key parts of the economy, of course, is the financial sector, and China has been pushing a couple of financial sector reform, including interest rate liberalization, exchange rate regime reform, current account and capital account convertibility, and the RMB internationalizations. Now, if you ask why China is trying to push to use this RMB for cross-border transaction, I think it just makes sense, to use its own currency. Now, for an economy, is the second largest economy in the world and the largest trading nation globally. It makes sense for them to use its own currency to book and to settle their trade across the border, as well as cross-border investment flow. So China shouldn't use the third-party currency, given the size of the economy. And you think about the economic case of using RMB, it makes sense because corporates and can manage their payable and receivable side on their own, using their own currency, and that's obviously can reduce the cost of hedging, and in the long term it will be a cost-saving strategy for Chinese companies.
And Raymond, we've seen over the last few years, but particularly in recent months, announcements quite regularly about this internationalisation and opening up process, and whether it's arrangements with other central banks. Which of these have been the most critical ones? I'm assuming that some of these are relatively administrative, but some are genuine steps forward in the process.
No, I think all different type of reform and liberalization are very consistent. If you look at how the PBOC is trying to promote the use of RMB, first of all, they signed the currency swap agreements with other central banks and to promote their own currency at the policy level. Once other central banks are willing to accept this and to recognize this as a currency that can be used in the domestic market, then China assigned some of the clearing banks to facilitate the whole process in the banking sector in the host countries. So you can see this is a typical formula for China to promote its own currency, and it's a very critical step. And now that if you go to other countries, you can see many Chinese banks present in those countries and to help facilitate the RMB transaction.
Raymond talked about how valuable it is for a country to be able to trade in their own currency and not constantly have to use, for example, US dollars. So when you look at the trade flows and what's happening with the RMB in trade flows, are you seeing that? Are people starting to realise the benefits?
Yeah, I actually believe so, because trade has become a even more kind of critical focus in terms of making the currency more internationalized. Because in the past several years, of course, the volume of the trade has been boosted, but it's more in the sense of people want to have the arbitrage opportunities over the onshore and offshore interest rates, over the expectation of the currency appreciation. But currently, people are looking more at the risk management element, and this is actually continue keeping the trade volume to be very steadily going up. Because as Raymond just now said, we are not having a currency that was previously like one-way appreciation, and there are fluctuations. So the Chinese importers and exporters, they would seriously kind of putting this currency risk management on their agenda, and continually to negotiate for a use of the local currency renminbi to be the settlement currency of the trade. And also there would be other positive kind of factors or trends that helping more trade flows to be using renminbi. For example, the China is having its very liquid onshore commodities exchange to make it to be available for investors from the international to invest, and this would have more kind of commodities to be priced and traded in renminbi globally. And also with the signature of the China-Asia free trade agreement, this would have further kind of catalyst for increasing renminbi denominated trade between the two countries. So basically all those factors would continue to bring the currency to be a more kind of popular international trade currency.
Thanks. And look, we should really wind up with a discussion of what's going on today in China. So I might get just a brief answer from each of you. We've seen that enormous volatility on the equity markets, and coupled with that has been various concerns over a longer period about the rate of slowing of the Chinese economy. Do you think either that sort of volatility on the equity markets or what's happening in the macro economy is going to slow down or change the pace of liberalisation in financial markets and the adoption of the RMB? Maybe Raymond, if you kick off.
First of all, I don't think that what happened in the equities market had slowed down the determination for the policymaker to continue to liberalize and to reform its own financial sector. Actually, with this market volatility, it would basically urge the policymaker to look at the right kind of reform required to modernize the financial sector. And capital account convertibility is also one way. And recently, the PBOC made an announcement to allow central banks, sovereign wealth funds, and also supranational institutions to be involved in the onshore interbank bonds market and the rates market. And this is a piece of evidence to signal that the PBOC and the central banks and policymakers are still determined to push forward the capital account convertibility on a gradual and manageable basis. And they make that clear that will be all this reform will be based on a macroprudential basis, and that is basically an international standard comparable with other countries. So from my point of view, what happened in the market basically would help Chinese policymakers to accelerate the reform rapidly, but on a more careful and wise way to modernize its own financial sectors.
Yeah, and I'd agree with Raymond there. But I think the other thing to remember with the equity market, I think that what's been happening in the equity market is actually a sign of a closed market. And I think internationalization and allowing foreign investors in is what's needed in order to see these things reduce in terms of their volatility. Now, the onshore equity market for China, over 80% of the volumes through retail investors, and it's been heavily facilitated through margin finance. So you open those markets up to foreign institutional investors, have a more institutionally led equity market, which is how more developed equity markets work. And you don't see the level of volatility that you will see because you've got a more diversified investor base. And there's a pretty very tenuous link, I think, between equity market performance and growth rates of the Chinese economy. We've seen the Chinese market pretty much not do too much at all over the last few years at a time when China was accelerating its growth. And now more recently, with the run-up in the equity market, China's probably been slowing. So, I don't think they're necessarily linked. And I think the liberalisation process we're going through now will probably, hopefully, reduce the risks of these things happening in the future.
And Lucy, do you have a view on this?
Yeah. Yeah, I actually totally agree with the two gentlemen. The economic foundation is still remaining kind of sound and healthy, and on the other hand, this is an incident actually having the government to learn more, and they would actually, we are very confident they would be managing both the opening up and also the managing the domestic market in a more rational and kind of wise way. So actually quite a positive outlook.